Have you ever wondered if owning just a slice of Bitcoin could change your life, or if you really need an entire Bitcoin? Well, that is the big question we're going to be answering in this video. And spoiler alert, by the end of this video, you'll have a clear, beginner-friendly plan for your own Bitcoin portfolio. I'm Brett at CryptoGX, and in this video, I'll break down in plain English why Bitcoin has outperformed stocks and gold, what top experts think the price could reach this year, how much of your savings you might want to put into Bitcoin based on risk and goals, the rookie mistakes to dodge, like chasing risky altcoins and other cryptos, and finally, a simple roadmap to basically leave you confident rather than confused. So stick around, your future self may thank you. So let's stack Bitcoin next to the old school choices like stocks, gold, and bonds, and we'll see who wins on ROI or return on investment. Over the last decade, Bitcoin's total gain tops 26,900%, while the S&P 500 climbed about 193% and gold only about 126%. That means that a $100 bet on Bitcoin in 2014 would sit near $27,000 today, but the same $100 in the S&P would be under $300. Zoom into just the last 5 years and the gap is still huge. Bitcoin is up 1,280% versus roughly 97% for US stocks during the same span. Even just the last year for all of 2024, Bitcoin's jump of about 129% dwarfs the 28% rally the S&P 500 had and the 32% lift in gold. Looking at longer research from 2011 to 2021, analysts found that Bitcoin averaged a 230% annual return, which is roughly 10 times the NASDAQ 100 and far above large cap US stocks at 14% per year. But you also have to know that Bitcoin is much more volatile. Its price swings much wider than stocks, but those swings cut both ways, delivering the highest long-term rewards. The bottom line, when it comes to pure growth, Bitcoin has outperformed every other major asset class by a mile, which is why even a small slice of Bitcoin can supercharge a beginner's portfolio. Okay, but where could Bitcoin's price actually land in 2025? What could push it there? Wall Street giants are eyeing six-figure numbers currently, and obviously we're already at about 100,000, so where are we really going? Standard Chartered now projects Bitcoin around $200,000 by the end of 2025, driven by huge cash inflows into new spot ETFs. AllianceBernstein analysts see a similar $200,000 range, pointing to rising demand from funds and corporations adding Bitcoin to their balance sheets. Going bigger, Fundstrat's Tom Lee lifted his target to $250,000, arguing that growing scarcity will meet record investor demand. The biggest scheduled spark is the Bitcoin halving in April of 2024. The halving is a built-in code update that cuts the number of new coins that miners earn by 50%, slashing the fresh supply overnight. Historically, after every past halving, prices have climbed because less supply plus steady or rising demand pushes values higher. Combine that with regulated ETFs, which let anybody buy Bitcoin like a stock, and you get a setup that many analysts call digital gold fever. No forecast is a sure thing, but with expert targets clustering around $200,000 and upside from that if adoption beats expectations, 2025 could mark Bitcoin's next big leap, and we've already seen that so far in November of 2024 through now, with it jumping from about $70,000 or $80,000 to well over $100,000. Now that we've heard the bold price targets, let's talk numbers that you can actually control. How much of your own money should sit in Bitcoin? Think of allocation as the slice of your total savings that you put into one particular asset or asset class. This is typically shown as a percentage, so the size will fit your budget, whether you have $100 or $100,000. A cautious starting point is about 1 to 2% of your entire portfolio in Bitcoin or crypto as a whole. BlackRock, the largest asset manager, says most everyday investors who really want to get into crypto should aim for just 1 to 2% in Bitcoin. At that size, a Bitcoin crash won't wreck your nest egg, but a big rally still moves the needle. Now, moving up from a cautious portfolio to maybe more of a balanced middle lane would be about 5 to 6%. A famous Yale study on diversification found that about 6% in Bitcoin gave them the best mix of risk and reward, even for people who really doubt crypto. The Motley Fool also suggests that a 5% cap can lift returns without making you lose sleep. If you're comfortable with price swings, which are called volatility, which is how fast an asset goes up and down in price, this range packs serious upside while staying in a minority slice of your portfolio. Now, moving up from a balanced portfolio would be the high conviction tier. This would be about 10 to 20% or more of your entire investment portfolio. Some forward-thinking funds like ARK Invest model about 19% in Bitcoin as the optimal for very growth-hungry portfolios. And even beyond that, legendary investors investor Bill Miller even holds about 50% of his wealth in Bitcoin. This is proof that very bold bets do exist out there. But remember, the bigger the slice, the wilder your total balance can swing. Only place double-digit percentages if you truly understand the risk and can avoid panic selling when the price dips. When it comes to personalizing your portfolio, ask yourself these 3 quick questions. Number 1, on risk tolerance. How much loss could you handle without panicking? Number 2 is time horizon. Can you hold at least 4 years? Bitcoin often has these full cycles that are about 4 years long from top to bottom. So if you see big dips, are you willing to hold until the price goes back up? And number 3, what are your other goals? Keep an emergency fund and pay high interest debt off first rather than just dumping everything into Bitcoin. A smart way to begin with your Bitcoin journey is dollar cost averaging. This is buying a fixed dollar amount of Bitcoin each week or month. This smooths out your entry price and keeps your emotions low. Let's say you buy once a month and it's $100,000 at the beginning of the month, and then the next month it's $90,000. You'd probably wish you bought it at $90,000 rather than all at 100. So if you even it out, your average price is at $95,000. Another important factor is to revisit your percentage that you're allocating at least once a year, maybe even half a year or quarterly. This is because if Bitcoin rockets and doubles your slice, you can trim it back so that it maintains at your percentage that you wanted it to be at. Let's say Bitcoin is at $100,000 and then it zooms up to $200,000 and you had it at 10% of your portfolio. Well, then it's probably going to be roughly about 20% of your portfolio. Other things are going to rise too, but let's say it's 20%, then you can sell half of your Bitcoin. It'll be 10% of your portfolio again, and you can put the rest of that funds into the rest of your portfolio or do whatever else you want to do with it. In short, start small, scale with the knowledge that you develop online, and let your personal comfort rather than hype set the size of your Bitcoin portfolio. So now you've picked a Bitcoin slice that fits your budget. That's great. Now dodge the rookie traps that wipe out lots of new investors really fast. So first, don't dump cash into every altcoin, which is any other crypto that's not Bitcoin. About 50% of the ICO or initial coin offering tokens launched in 2017 never raised real money or later died. This is proof that most new coins go nowhere. Second, you gotta beat the FOMO, which is the fear of missing out. There's many top mistakes that you can see here on this blockchain-council article, but we're looking at how to avoid these mistakes. And one of them is when you buy during price spikes and then panic sell on the next dip. This is how a lot of beginners lose their stack of funds. So slowly and steadily buying is gonna work much, much better. And that brings us to number 3, never risk more than you can afford to lose. Plan your budget, decide on an amount that you're willing to lose and stick to it. Investopedia ranks over investing near the top of the costliest crypto mistakes because Bitcoin can swing 20% up or down in a single day. And usually these swings are what cause people to panic sell, especially if they are over invested and over emotionally invested. And next, skipping hardware wallets or strong passwords leaves you open to hacks. Another common problem that people have that's called out by security pros. So basically stay calm, stick to your plan, and you'll sidestep these traps that trip up most first-time investors. With those pitfalls cleared, keep in mind the big picture. Bitcoin has skyrocketed about 26,000%, maybe even closer to 27,000% in the past decade, which is far beyond stocks or gold. Big banks are taking notice. Standard Chartered sees Bitcoin at roughly 200,000 by late 2025, and we'll see how this develops, but a lot of investors and analysts are actually pointing to a similar price point. But on the more risk-averse side, BlackRock says that most people only need about a 1 to 2% slice to boost their returns without any crazy risk. All of this is to say that you should choose an allocation that you can sleep with. Skip all the shaky altcoins and set a plan to hold for years. The most risk-averse method within crypto is to keep about 60% of your crypto portfolio in Bitcoin, so you have a steady main portion of your portfolio. And then the rest of that you could fill in with other coins on the top 10 or top 20, also by allocation, most in things like Ethereum, and then go down the list beyond that. Keep your crypto portfolio at a small portion of your entire investment so you avoid the drastic volatility that crypto most commonly sees. Some exposure is often better than too much, especially if you think you might sell at a loss before letting the market take the time to go back up. If talking about all these numbers and future prices got you fired up to start stacking your Bitcoin, I'll put links in the description for Coinbase and crypto.com where you'll get $50 in crypto just for signing up with those links. And if you want to get into meme coins, I also left a link to MoonShot where you can claim some free meme coins when you sign up. If you learned something new or just enjoyed the video, make sure to hit the like button and hit subscribe if you want to stay tuned for all things crypto. Thanks for watching. I'll catch you in the next one.